Simplicity is the final achievement. After one has played a vast quantity of notes and more notes, it is simplicity that emerges as the crowning reward of art. Frederic Chopin. Well, my friends, that same lesson on simplicity is exactly what we look for each and every day, and we have tried to simplify our message over the years. And in fact, lately, particularly with the average true range teaching, the success multiplier formula, the always winning method, all of those things that we've put out in our latest trainings using the STC Indicator, all of that I feel like has simplified what we are doing, and that is really, I think, emerged as our crowning reward for what we've been doing over all these years. I hope you feel the same. Our job, and in fact the training today, for those of you that are subscribers, is on Occam's razor. That's the Occam's principle, that the simplest answer is almost always the best. So please take that over the weekend. Got a great training for you today. I'm going to go through the charts, and at the end I'm going to spend some time and shoot through a number of the moves that we have. This is a gold miner ETF. I did a short trade on this. I did a put and literally captured my profit in the morning. I was a little leery about where things were going to be on gold, so I went ahead and did about a 10% up and out. Cashed me out. I did not even know that happened. I got tied up with a million things. Checked the market afternoon, which is not what I typically do. Thought I'd gotten hammered with a 4% move up, only to find out that, thank goodness, what I tell you to always do, I do most of the time, and that was I put in a good till canceled sell order, 10% up and out, and boom, within less than a day, I had captured a nice little run. Now, you can do these practice trades all the time. This is a real money trade for me. I don't give advice on real money trades. We're an education firm. We're not a stock calling service, Bitcoin calling service, commodity calling service, whatever. We want you to train with us, learn. We encourage you to practice, practice, practice. That's how you get to Carnegie Hall, and perfect practice makes perfect. Now let's move on to these charts. I will go through a list of a lot of things that are happening right now with some real stocks and ETFs at the end of the show, but we will push through our charts first and foremost. You can see that we had a trade that opened itself up on a short yesterday as the market started to roll over, and we had the STC go from green to red, and of course we set in our 3.27 profit, a 2-to-1 profit risk to reward ratio. Not quite hit it yet. We are headed that way, and hopefully that will happen. It's right around that last swing low. Actually, there's a lower low there, but the most recent swing low right there. We'll see if we hit that on Monday. So again, we look at the S&P 500. Of course, we've been waiting for another swing. Didn't make anything on this one. We did well on the prior one. This one is looking good. We'll see how the markets go on Monday. With our success multiplier formula, we're at a 15 on the S&P 500. You can see where the 2-day rotated over the latest 2-day STC. And of course, the weekly is down. So why would you not jump into a down trade there? Those of you saying, why would you buy anything when it's going down? We wouldn't buy the S&P. We would either buy the short fund, that is SH, which consequently goes up when the S&P is going down. This is a special inverse fund managed by ProShares, and of course it mimics the S&P 500 to the complete opposite percentage-wise. You can see the share price is different, but it moves up the same percentage that the S&P 500 chart moves down. It's pretty beautiful. Same thing, we'll move on to the Nasdaq 100. We talked about this yesterday. We didn't have it rotate over, but it did this morning. and we went ahead and pulled the trigger on that. And you can see as we track it, we went in and set up our risk to reward ratio based on what the average true range was. It was a stop of 7.25. That is 7%. I'm 7%, $7.25. And we went ahead, you can see when we open this up how we set it. For those of you not, ticks, that was the word I was trying to think of just now. 725 ticks, which is of course $7.25. We set that up, we doubled it for the profit level. And of course, when you do that, boom, this little, in fact, we find it over here, this little prediction and measurement tool. This is a measurement tool. It pops it right in there, makes it easy for you. And again, stay true to what you set up. You can, of course, take your profits at any time, but you never let your risk, your loss go beyond the loss band. So we are hoping this is going to be moving in the right direction. We're at a -11 for our success multiplier formula. The 2-day's still up. The weekly's down. And again, you can see we ended the week with a red spinning top after a green up candle last week and a red spinning top the week before. So that is where we are. 2 down trades on the Nasdaq 100 and the Qs respectively. Let's move on to 20-year bonds. We will start with the half-day chart. And man, that really got jammed up. Stretch that out a little bit and show you where we stand there. We had that prior attempt at a down trade. What happened? Of course, things went down quite nicely and then bounced up. So we pulled out of that trade just in case it was going to fly all the way back up, but ready to jump back in, which we initiated in the morning on the 8th of June, and it is moving in the right direction. So again, made a certain percentage here, not the full 3.10%, somewhere around a 1.75%, something like that, and then turned back around and jumped back in when those candles went in the right direction. So we'll see how that continues to do. Again, we're ready to pull that trade at any point that we need to. You can notice as we go back in time, we had the same thing happen here. We caught 2.56% instead of the 5.32 when our candles bounded on us. But you know what? I'll take 2.56% in the course of 1, 2, 3, 4.5, 5 days. Not bad. Not bad at all. So we'll watch this as it continues to go. By the way, success multiplier formula is a -11. We get 1 point from the half day. We can see that the STC is green, so that takes those 4 points away from us. We don't get to add those in. But the weekly is down, so altogether -11. Not a 15 like we saw with the S&P, but the same as we saw with the Qs. But again, lets us know when we see those numbers how much power there is in the down push, that down wave. Next, we will go to gold. What's up with gold? Well, we saw gold move up here a while back. We had a nice short trade on gold, as you guys will remember, 2.89% down. We hit that and captured that quite nicely. So the last move up in gold that we had, we didn't go far. Why? Because we were below the 200 EMA. Gold tried popping up again, still didn't make it. However, check it out. Gold popped up and hit it in the morning. We didn't enter our trade until the afternoon. There was just too much indecision there with that little green spinning top for us. But we did decide to initiate that gold trade in the afternoon. Now, this is not one that I put any substantial amount in whatsoever. And the reason is because the success multiplier formula is at a 1. Check out where we are. We're red when it comes to the 2-day chart. We are red when it comes to the weekly chart. So this is one where I am somewhat skeptical, but because we hit it, I wanted to go ahead and pull the trigger. And again, This is one of my experiments here. I told you guys typically for my fractional trading, it's around $1,000 that I look at to risk. When I'm doing a little of these practice things, I encourage fractional trading when you start getting good. Why? And again, $100, something like that is a good thing to do. Why? Because it's a small amount of money, but it does put you into the market doing something. And of course, you'd have to have a fractional share here if you wanted to put in $100. Many brokers allow you to fractionalize your purchases, and they will sell you a fractional share, which is something, again, if you just want to experiment a little bit and not put much money at risk, something you can do. So that is what we're waiting for. We're going to monitor this and see if it goes in the right direction or if gold starts to crash, and we will pull that trade and learn from it. Let's go to Bitcoin. What is up with Bitcoin? Down for the day 3.50%. And of course, what do we see? We're well below the 200 EMA. Bitcoin has been sliding sideways, popped up a couple of times, and now is just back into a downtrend, but hasn't hit the lowest low all the way back on the 12th of May. So we'll keep an eye on things, see where that's going. Bitcoin, of course, is red on the 2-day chart, is red on the weekly chart. And the only thing that actually shows any green, which we don't count on at all, because of this sideways slide, our STC has gotten really inaccurate. So lots of downward pressure. Still on Bitcoin, but is just not going below the low, which is a good sign that maybe it's trying to consolidate to move up. Don't know that that's going to happen, but hope springs eternal, and as long as you don't do anything stupid, you can hope all you want. That is where we are, my friends. Let me go over. That's it for the charts we typically review. I want to show you some of the trades that we have been looking at and initiating. Explain to you a little bit about what we see happening right now. And I would just point out to you, if we go, of course, to like the S&P 500, what do we see there? Well, and the reason I bring up the big chart first is when you see the S&P or the Nasdaq 100 roll over strong down, when it starts and it really starts, the reason, of course, the S&P is going down is why? Because its stocks that are in it are going down. And that means that you have a surge of downward movement. And when that happens, it's sort of like a pile-on. You'll have some early stocks that start to move down. And then as things emerge and the cascade starts, everything starts moving down. Here's one of the stocks that started moving down first. This happened. We initiated this short position with Advanced Micro Devices. That was back on the 8th, okay? It's the 10th as I record this. This was a forerunner to the pile-on that started. And again, you can be nervous with these. You can see how it started out. It didn't start out cascading. It started out, sort of moving in the wrong direction. But the candle stayed red. And then things really started moving down. You can see on Friday where the cascade started. A little bit on Thursday afternoon, like we saw the S&P rotating over. And then on Friday, a hammering down. Now, we saw things, I started off with AA. In fact, this is Alcoa. And it started, again, a little bit later. This started on the 9th. But again, started accelerating in the afternoon on the 9th and then in the morning on the 10th. So a little bit more room to move to capture that 10.23% down move. But again, moving in the right direction, heating up on Friday and quite beautiful. Did have a trade that actually hit the parameters that we were looking for and actually did that in the morning on Friday. It started a little bit early too. This actually started on the morning of the 8th. This is Bank of America. Of course, cashed out with a down move of 4.33%. Now, for our Patreon members, you know from the trainings that we provided to you at the Patreon page on the Greeks, how you use this information for options. And of course, when you're looking at how much of a down move you expect dollar-wise, $1.54, you can use the delta, you can use the gamma, and you can calculate along with, the implied volatility, all those other things. You can get a good idea calculating what kind of return you would expect, and you can go ahead and put in your good till canceled sell order when you purchase your option 5 months or so out. And again, you want that options training that we have. It is available for our Patreon members. If you're a Patreon member, somehow missed out on it, email me, cw@chartingwealth.com. I'll make sure you have the links. 3-part series, Options Made Simple the Charting Wealth Way. If you're not a Patreon member and you want what I think is the best options training on the market, please, by all means, become a Patreon member. Any level, you get it for free. What do we see with Colgate-Palmolive? I've not liked this particularly. It has not been all that good to me. However, it was wonderful to me on the short move. You can see where it was not good to us. We didn't really lose much, but didn't work in any of the prior down moves. Didn't work I guess a little bit in this up move, 0.60%, made up for those 2 crappy down moves. But this more than made up for everything, 2.81%, and captured that rather handily. Quite nice. Now, we move on. What do we see with DHI? That's Horton. Moving in the right direction. That was, again, one that we initiated on the 8th. Scared us a little bit popping up, but things were so good on the STC. We did not pull that. We got really close to our loss parameter, and then things jammed down on Friday. Now, wouldn't have had any trouble with you when that happened going ahead and pulling that trade, which you could have done. And then, of course, in the morning, you could have reinitiated it on the down move. So, follow your rules, set them up. At least if you do go outside the parameter of your loss band, then absolutely have to pull that move. What do we see with SPG? This is a good one. Simon Property Group played this one before several times for you. What do we see going on with it? Well, it was extremely nice. We initiated that in the afternoon on the 8th, moved down on the 9th, and then cashed out on the morning of the 10th. And overall, we saw a down move of 5.15%, double the risk that we had put in there. This is what you get when you had the cascading. It's the whole reason we pay so much attention to the S&P 500 every single day, because when we see it moving, we understand the underlying market is moving with it. That's what actually makes the S&P 500. So why it's so important. People are like, why did you choose 2 index funds? Well, because those help us see what's happening in that broad market. What do we see going on with steel? Well, U.S. steel is heading down. 8.75% is what we're hoping for. We're over halfway there. We shall see. Again, hope that's going to work out for us. This is the S&P, of course. Let me keep moving through some of these. Apple moving in the right direction. Apple's been good to us. Some great Apple plays. My biggest options trade this year has been on Apple. I think it was this one. And again, made me green for the year. I really appreciated that. So we've got, of course, a down move in Apple right now, hoping that's going to allow us to cash out. What about Disney? Disney's been good to me this year too. I did well on this Disney move on an option, and this one is initiated. Hope to see it go down 4.78%. It's getting close. Silver, this one did not work. We saw silver rotate over going down, hoped to hop in. It went down some and then popped right back up and has been closed. What about Ford? We look at Ford. Ford is moving in the right direction, not rapidly, but hoping that that's going to keep going in the right direction. Had a good trade in Ford back here, did not have a good trade in that one, and closed that with a small loss. So, again, all of these things balance out when you follow the rules. Now, gold, we already told you about that. We've initiated that. I told you about the Gold Junior. This is the one that I jumped into back on the morning of the 9th. And thank goodness I put in that good till canceled sell order. Didn't try to capture all of this move, just put in 10% up and out. I'd done an earlier trade, an earlier option trade this week on another stock that I think it was American Airlines, in and out at 10%, just because it's the summertime trading zone and things are real choppy, and I wanted to capture something but not get stung, and doggone it if that didn't work out well for me. And again, you say, Tom, all these things you're telling me, how am I supposed to? Look, all you have to do, practice 10 to 15 minutes each and every day. Don't start using real money. Just start putting together exactly what we're showing you here. Go to the prediction measurement tools. Put in the long one or the short one. Use the ATR to set your profit and or loss bands. 2 times the ATR for profit going down, 2 times for profit going up. And again, follow those rules. When it works in your direction, do it. If you're below the 200 EMA, initiate short positions when the STC rotates over going down. If you're above the 200 EMA, execute long positions when the STC goes from red to green going up. How hard is that? And again, if you cut your losses, you, my friends, will see the reward for your efforts. All you got to do is add up the practice trades, or if you're doing small fractional amounts, see how it works. Again, those trainings we have, I'm going to put all 4 of them at the end of today's video. I want you to take those. Listen, learn, work, practice. You can do this. It's not rocket science. It's charting art. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters. I'm your biggest fan.